The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Our stock of the day is COL's. Growth in its supermarket segment has seen the company's sales revenue increase to $10.4 billion in the third quarter, a slight increase from the reported $10 billion in the corresponding period last year. They reported that supermarkets had a sales revenue of $9.4 billion for the third quarter, which was an increase of 3.7%. Group Chief Executive Leah Weckert said the results reflect the continued investments that they're making in value and improving the shopping experience for customers both in-store and online. So, what do our experts think of, well, the supermarkets obviously seen as defensive? They certainly did well in those, particularly the height of the turmoil that we saw on the stock market. Henry, what do you think?
Well, I think you've just encapsulated it very succinctly, Andrew. They are defensive. They have been doing okay. Woolies has had a reasonable bounce as well. I think Andrew, with his buy of the decade at $30, well, they're certainly looking a little bit better. That was some months ago. So, you know, they have been defensive and they have been big names. They have been a place for people to hide out in. You know, the results from Coles were okay, not particularly brilliant. Liquor did underperform some of the expectations in the market, but it does appear that Q4 has started well. I was quite impressed with the e-commerce sales growth, especially in the supermarkets, 25.7% higher there. And, you know, everything's going okay. The fulfillment centres are being, upgraded. That ramp up at Kemps Creek is really doing well. So, you know, it's not a bad environment for Coles, but, you know, it's not like we're all going to rush out and buy 10% more food. It really is a defensive kind of strategy they have, and they do it very well. And, you know, I've always thought that in this country with Coles and Woolies so dominant, you know, they take it in turns to be the best of the two. And at the moment, Coles certainly is the best of the two. It's run pretty hard, let's face it. So, you know, up here, I think there's probably better opportunities elsewhere kicking on as, you know, as we move out of defensive stocks, maybe into more risk stocks and stocks that have been whacked. But, you know, 21, 22 or whatever it is today, it's had a pretty big run off that, you know, $19.50 that we saw back at Liberation Day. So for me up here, it's probably a hold. Woolies is probably the same as well. You know, I'm sure they'll be both glad to get the election out of the way, as it can be a bit of a political football for the governments or the opposition to kick these guys in the proverbials. So I think that will certainly help, but both of them are a hold.
Well, they tried kicking them, didn't they? But
they tried.
Yeah. Well, it was just a light smack, really, wasn't it?
I haven't had smack for a long time.
Well, from a customer point of view, it was disappointing, you would think. Maybe not from a shareholder point of view, though. Andrew, what do you think?
Happy 31st wedding anniversary to Henry in unrelated news.
Goodness.
Oh, I know, 31 years. Who would have me?
There are so many lines in such little time. Anyway.
Well, I can see that he's going to head off to Coles to buy those flowers for his wife.
Yeah, long ago. That kind of got phased out in about year 15, right. I think.
Happy anniversary to Henry and Jane. Coles, look, certainly fully priced at these levels. Consensus is about $21. I agree with Henry. The result was okay. That the e-commerce piece in particular, about 25% growth from memory, has been going on there. And you know, it was a 3% increase in sales, which doesn't sound that great, but it was off a pretty strong third quarter last time. So that's certainly a positive for them. And to Henry's astute point relating to being a political football, you know, previously it was the banks, then it was the grocers, the consumer staples. You'd have to think the insurers, they're probably going to be next in line, subject to who wins the elections and so forth. So there's probably a little bit of political risk with these ones still, certainly fully priced on a share price point of view. Henry mentioning my buy of the decade call when Woolies went to $28, I was feeling a little sadder. But, at 31, 32, I'm feeling a touch happier. I'd probably still buy Woolies over Coles, but it's, a bee's whisker. There's not really much in it. But at these current prices for both, I agree, they're holds. They're not compelling buying. They're okay, but they're certainly not compelling.
That is the double hold for our stock of the day, Coles.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.